obviously a frustrating market. We're tired of this stop, start, stop, start. Looks like we're going to go, then pull back. It's really caused havoc for our junior mining stocks. And obviously, interest in the sector is at an all-time low almost. And so this makes it very difficult for certain mining companies, especially the exploration players, who have to keep spending money and raising money. And it's hard to do that in this type of environment. That's why I think it's important. I'll talk a little bit more about this, but it's important to have the right model. There's exploration stocks, there's royalty stocks, there's producers, there's what I call long-term call options on the precious metals. And I'll talk a little bit more about that later. But that's one of the reasons why I'm so popular, why I'm so high on the royalty model. The royalty model is hard to beat, regardless of what environment we're in. And the risk is low, and the upside is still as great. So anyway, one of the things I was comparing was I've been a newsletter writer now for 23 years. Hard to believe. I've been a personal investor in junior mining stocks for 40 years. I'm 66 next month. And, I was doing a little research. I haven't quite finished it yet, but I'm going to present it next time I do a talk. It's the performance of when I first started from 2000 to 2012. I call those the glory years of the junior mining sector, the glory years of wealth creation at low taxation. A long-term capital gain, you could make millions and pay 15% down in the U.S. Up here, maybe 20%, I think it was. But now the whole situation has changed. 80% of the time in those first 12 years, 80% of the time we were making money. 20% it was a bad market. The last 11 years, it's been mostly down market with very few up years. So it's been totally opposite. And it's been much more difficult as a newsletter writer to keep subscribers interested in a market that doesn't seem to go anywhere sometimes. So what I'm saying, all this is good for gold. Gold is going to go. It's going to go, and it's going to, we don't know the timing on it, but it's getting close. And it could be 2 months, it could be 2 years. We just don't know. And so this is why exploration, putting money into exploration stocks, you have to be real careful right now, because they use the money up and then they can't replenish their reserve of cash. One of the things in the glory years, I have to tell you this story, is I got hired by a fund manager, and he had made some money with me, and I guess liked what I was doing enough to hire me to teach all his young people. In that world, the fund manager, there's a lot of nepotism. The kids, his kids, uncle, nieces, nephews, whatever, they get hired into the fund. Well, I got hired to go back there, and they set up a nice venue over 2 days at a really nice hotel to teach these young ones, the nursery. All the kids that just came out of college, the Silver Spoon kids that were being paid $1 million a year by uncle to come work for the fund, right? But they didn't know anything. So I get hired to train these guys. Well, just to give you an example why we're having a problem in our market. Back then, these funds were taking a shotgun approach. They were just, had tons of money. They just come in and they'd buy everything in the junior mining stock world, right? And all the boats floated, and it was wonderful, right? That's not happening anymore. They're much more careful about and specific about what they do. As an example, I was at the PDAC, and one of these young men I trained saw me on the floor. And he says, Greg, can you help me? There's 450 booths here. He says, Uncle told me I gotta spend $5 million each on 20 companies. I'm here to spend $100 million. Which companies do I talk to? Right? I mean, that's how wild and crazy it was. And so I walked him around and took him to all the booths that I thought he should invest in, right? Anyway, that doesn't happen anymore. The funds are noticeably absent from our market, and they are the people that drive our market into the Super Bull market territory. I know it's coming. It's just hard to predict. We don't know the future, but okay. So the reason I know that we're going to go higher is I study history. I'm a student of history. And historically, what we're seeing in our society, in our world, in the financial landscape is just totally unsustainable. It's all good for gold, okay? It's not good for, the well-being of society. Unfortunately, there's trouble, and it's going to affect all of us. But it's going to be good for gold, and the wealth creation that can happen is going to be amazing. But what I'm saying is the glory years are over, because now we may make a lot of money, but the taxation is going to be much higher. Things have certainly changed in the U.S. that way, and we're paying much higher the way they've set things up now than we used to. So, first unsustainable situation: a house divided cannot stand, as Abe Lincoln said. The division of the people, not worldwide, but in the United States, it's so palpable that you can feel the hatred as you just walk around. And the people wear these shirts on purpose to cause hatred towards one another. It's quite shocking. If someone would have told me 10 years ago our society would look like it does today, I would have said no way. But just within 10 years, we have seen shocking changes, and division throughout history in a society never is sustainable. Going back into, no matter how, as long back as you can go in secular history, even go back to biblical history, it's the same thing. Second, the other unsustainable situation is this fiat currency system that we have. All fiat currencies end in inflationary panic and disaster. That's a fact, right? Do we think that our fiat currencies aren't going to be different? No, they've just been able to, as David suggested and said wisely, that they've gotten better at trying to maintain the status quo before the ultimate end result comes. But I'll explain why I think that end is coming, and why all fiat currencies are headed for the dustbin of history. The third thing that's unsustainable: abandonment of truth. Looking at secular or biblical history, it's the same story over and over. You cannot ignore the truth and succeed as a society. It just doesn't work. The Roman civilization, you study that. I've studied that in great depth. Someone says to you, this isn't blue, this is orange. And they make you believe it, right? Well, that's nonsense. But that's what we see. We're trying to be told that, the truth doesn't exist. Well, does truth matter? In my view, it has been and is being turned on its head by society, government, and mainstream media. Opposite of the truth, of course, is lies, deceptions, and falsehoods. Absolute truth does exist, whether people understand it or not. And history shows when societies and governments ignore or subvert truth, as they have, the end of that society or political structure is near. That's just a historical fact. Study history, you'll find the same thing for yourself. There's a lot of good books to read in that regard. I won't go into that now. I don't have enough time. And of course, anybody who tries to speak the truth, the further a society drifts from truth, the more it hates those who speak it. And this is becoming a real problem. In our trying to raise our children in a good educational system, where we're going to battle with a small group of people who want to control the narrative, and the silent majority hasn't said anything, but now people are starting to get upset. I'm seeing it down in the States. The anger is boiling over. They're getting ready to take off the gloves, and they're going to go at it, right? So more chaos, more confusion. That's all good for gold, unfortunately. I hate that that's how we're going to make money, because society's going to collapse, and we're going to have problems. It's unavoidable at this point. I don't see any solution to what's happening to us. So there's also a demographics problem. The example of baby boomer. I'm a baby boomer, born in 1957. I'm kind of the tail end. It's 1945 to 1960. That group of people represents 75 million people. These people were the most successful people of the society. They made a lot of money. And as they got into their 30s and 40s, they started putting what? Money, direct deposit right out of their payroll check into the market for retirement. Okay? 75 million people, that's a lot of money. That supported the Dow and the S&P markets in the U.S. and caused them to grow. But now that demographic is changing. Half the baby boomers have already retired, and instead of putting that money in, they're taking it out because they want to live the good life, right? And this has affected the Fed because the Fed's model was working on this increasing dynamic where all these people are putting money into their markets, right? Well, it's reversed. And this is why the CBDC, central bank digital currency, is becoming forefront, because they know the game is up with this whole dollar situation. They can't sustain what's going on anymore. They're going to have to switch us into a different situation. They want a digital currency that's controlled by a social credit score, which is another whole talk in itself. You know, we should be fighting against this, as I always say. And, you know, this totalitarian type of existence is so scary if you really get into it. I don't know if you've seen the software. I saw this presentation on the software for the CBDC, the social credit score. So they go, oh, Mr. McCoach, you said something terrible at the MIF. We don't like you. You look at their point and click software technology is they can suspend my ability to travel, suspend my ability to buy and sell at the store. You see what I'm saying? It's total hegemonic power and control. And these totalitarian schemes have been tried throughout history, and they tend to fail. But the problem is they do a lot of damage along the way before they actually fail. And then we're all left picking up the pieces. So, you know, I keep saying, look, we got to help people wake up to this reality. We don't want that kind of control over us. That's a total loss of liberty and freedom. You could be going to get a double Big Burger Mac, and because you're overweight, all of a sudden the clerk says to you, Mr. McCoach, you're overweight. You have to get a healthier choice, right? This is the kind of stuff they're going to be doing with this. You know, I watched this presentation. It was very good. And it's done over in England. Anyway, so this is why they want this control. And they know that the days of the dollar and the days of all this debt, you know, there's no possible way the United States can pay its debt back. That's ridiculous. So they got to do something different. Is there going to be a jubilee on debt? Is there going to be, you know, we don't know. We don't know these things. But it does look like those who have worked hard and saved the money in the switcheroony from dollars to the CBDC, it looks like you're going to lose a bulk of the purchasing power of your money. Like, as an example, $100,000 in the United States can buy 3 Ford Escorts today at the Ford dealership. After this event happens, which could be in the blink of an eye, a weekend, a week or two, all of a sudden you wake up, your $100,000 can't even buy a motorcycle. That's what's coming. So that's why gold is important. So it's all good for gold. Any kind of instability that happens, wars, rumors of wars, financial or societal situations, chaos, confusion, anger, hatred, division, no trust in what is a store of value. That's the problem now. What is a store of value? Paper, ink with paper on it, you know, paper with ink on it, calling it money is not money. Physical gold, through 5,000 years of history, has proven that it's the ultimate form of money. And the people that run this world, who I always refer to as the PTSB, the powers that shouldn't be, know it as well. And that's why they own most of it. So again, what's good for gold is unfortunately bad for the big picture. But what else do we do? Where else do you go? You're kind of painted into a corner at this point if you want to try to survive this financially. So more items to consider. I talked about the glory days of wealth creation in the 2000 to 2012 at low taxation. Well, I believe we're going to have a big wealth creation moment here with the super bull market in precious metals. Again, I can't say when that's coming. So you just try to build your portfolio with companies that can be sustained over the long haul. This is why, you know, as much as I love exploration, it's been difficult to watch a lot of our companies, just great projects, great people, but no money. And then the stock goes down, and then they can't raise money at such a low price. I told you about being a newsletter writer in those 2 different periods and why our market is performing so badly when it appears we should be going. Well, today at 3 o'clock, we're going to do a panel on that. I'll be on the panel. John Kaiser is going to be the MC on that. That should be very interesting. And John's always a hoot. So I think we're really going to try to dive in, do a deep dive on why this is happening, why we should be going, but we're not, and always in this frustrated mode, okay? And I explained some of my experience with fund managers. I always go to the Beaver Creek Precious Metals Summit every year just because I want to talk to these guys. I want to get a feel for what they're thinking. And they're all sitting there kicking the tires, meeting with the mining companies, but very few, no money, no shotgun approach. Hey, just take 100 million, go buy 5 million of 20 different companies. That's not happening anymore. They're very selective, and the bulk of the money is not coming into this sector right now. And you're thinking, wow, they've made a boatload of money in the general markets. They got to be thinking they want to protect that. The bond market's destroyed. Where are they going to go? They got to come to gold. I think they know it, but there's some reason, and I have a theory about it, but I won't discuss it here. I'll talk about it in the panel this afternoon. So it's important for investors, from my standpoint, to consider which model works best for you in this investing environment. Given the current circumstances, right? Royalty companies are the first choice for me. It's the safest way. A good royalty company with good revenue projections, good revenue currently and good revenue projections is really, I think, the way to play it in a volatile market like this that's been mostly to the downside. The long-term call options on gold, I call it. There's a company out here, Westvault. I have to laugh because it's a great model, but it's very boring. I recommended a company called Vista Gold when I first got started as a newsletter writer. People would always ask me, Greg, this stock does nothing. Why do you keep recommending this? I said, because when gold goes up, okay, all these companies, all that Vista Gold was doing was holding all these great Nevada gold properties, right? And didn't do anything with them. They didn't want to spend any money. They just kept their share structure really low so that when gold went up, these properties could be sold or vended out and things like that. Well, took quite a while, but as an example, one of the companies that Vista Gold had was a property called Highcroft that they vended out called Allied Nevada. And as Vista Gold shareholders, we got 0.77 of an Allied Nevada share. So if you had 100,000 Vista Gold shares, you got 77,000 Allied Nevada. Well, Allied Nevada went to $45. That's why, and people said, God, Greg, that was a boring thing, but wow, that made me a lot of money, right? If you could hang in there. It's very boring to just watch the stock do nothing until that moment comes when all of a sudden, and that's what, it's so funny. Two of the properties that Vista Gold had, this company now has, called Westvault. And it's a good strategy. It's like a long-term call option on gold. If you believe gold's going higher, it works. Okay. And then the producers and exploration. When you look at the best producers who are making money hand over fist, Newmont, Barrick, their stock price has been cut in half in the last 6 months. I mean, what is going on? They're making money. They're loaded with cash. They got to replenish reserves. Let's get a discovery that they can buy out, right? They're dying to buy out a discovery. All right, so my 2 letters, the Mining Speculator, the Insider Alert. Anybody wants to subscribe, discoverynexus.com. And it's just hang in there. I think we're getting there. It's been frustrating, but we're coming to the point where once this thing goes, it's going to be a super bull market. You'll know it. It won't be gold going up to 2060 and they say, oh, we're at a new all-time high. No, that's not what we need. You're going to know it because gold's going to go flying through $2,500 an ounce on its way to much higher level. But then again, it's going to be because of severe situations going on in the mainstream world. So, all right, well, thank you for listening.